Good morning, everybody, and welcome to the Seiler Wealth Management video blog. Today is Tuesday, August 2nd, and we had a record-breaking July, and typically you have, every once in a while, you get a pretty nice summer rally, and we certainly saw that, after a volatile June and all the Brexit talk at the end of the month, which I think that occurred June 24th, and then you had the big 600-point drop on the 24th, and on the 27th you had the additional 300-point drop, so the Dow dropped 900 points, but it looks like that 2 weeks later, like it never happened. And stocks did hit, the S&P, the NASDAQ, and the Dow all hit all-time highs during the month of July, while the market in general was up about 4%. So we had a record-setting July, and I think that those numbers were anticipating a pretty good earnings season, which we actually have seen. We've seen pretty good earnings across the board. Very few disasters out there. I mean, even the important companies did pretty well. We were hoping to see what Apple did. They did pretty well. Facebook did very well. Google did well. Amazon. So these companies that have really been holding the market higher did extremely well. The healthcare sector was coming out with some pretty good numbers. You had services companies. So across the board, there weren't a lot of disasters. So that has helped stocks stay at these levels. Now, once earnings season is over, which we're pretty close to being over, now I think that the market has to look forward to the election, which we know what a cluster, that has been. And it certainly looks like Hillary's probably well on her way to winning. And that's what the market is expecting anyway. So I don't think there's going to be much of a shock to the system with a Hillary win. However, I think there's going to be some volatility between now and the election. And I certainly believe that August, September, which are seasonally the toughest months of the year for market performance, I think we could see some volatility to the downside, and I'm just suggesting everybody be very cautious. Any new buys, you really have to be extremely cautious, and I don't really feel comfortable buying things at all-time highs right now. I mean, the good news is when something's at an all-time high, it's there for a reason. It's normally a good one. However, I think a tired market, which I think we are in right now, slightly tired because the last couple of days have been a little bit of a struggle, I think we could pull back and give us that little 3-4% pullback, and we'll see what happens when the election occurs. So be very cautious on any new positions, and don't be afraid to take some profits. We have been taking some profits across the board on some things that we've held for a while and have done really, really well. So we're taking some profits. I talked about the biotech sector. That seems to be still moving up. It was up yesterday, and the market struggled. So we'll see. But we're always going to have our finger on the trigger, on the sell trigger, that if it doesn't look like it's going to maintain an upward trend, we can get out. So that's the key for right now. Be cautious on any new buys. Be more on a sell side bias if you have to. And if you need any advice, just give us a call, and we will be glad to give you advice of any of your holdings. Okay. Now, very important. This Thursday night, we're doing our 2016 halftime report. So basically, what I'm going to talk about is how things happened, how it occurred in the first half of the year. 5 elements to look forward to going forward for the rest of the year, and possibly some strategies that you can use in your portfolio. It is a webinar. Starts at 7 p.m. on Thursday, the 4th. So all you have to do, I'm going to put a link right down here on this Facebook piece. All you do is click on the link, sign up. You'll get an email reminder, and you can log in from the comforts of your own home. That is 7 o'clock on Thursday, the Seiler Wealth Management 2016 halftime report. So we hope that you all log in. It's going to be some fantastic information. We had a really good crowd last week on our webinar, so we look forward to doing more of these. Actually, if you can't make it this Thursday, I'll be doing the same presentation next Thursday. All right, so 2 Thursdays in a row. So in the meantime, I hope everybody has a fantastic day. Be a little cautious of the markets. S&P futures indicating a little bit lower. Don't forget that sometimes you may need some alternative investments in your portfolio to lessen the volatility and increase some income, and that's something we can talk about privately in our offices. Alternatives are a really big piece of some of the major portfolios out there. Some of the big, like CalPERS, the big pension funds, the endowments, they use a large percentage of their portfolio in alternative investments. So let me give you a quick definition again. Alternative investments are anything other than stocks, bonds, and cash. So anything other than those 3 asset classes are considered alternatives. All right, it's been great bringing this today. Don't forget to click on and log on to my halftime report for Thursday. I'm Lee Seiler. You guys have a fantastic day, and I'll talk to you soon.